Alright guys, we're back with the Swiss versus the Japanese yen. Last Friday, the close on the weekly bar was sensational, guys. I actually saw that coming. Now, if you remember, probably 4 or 5 days ago, I've pulled the trigger for the first time on this bearish position, right? Swiss versus Japanese yen. You can actually see my first entry was right here. Price was touching base, and I'm talking about 2 weeks ago. It was touching base on that 113.62 major key level, spiked it and came back. That was enough for me to pull the trigger. However, what happened here last week was sensational because price went even stronger on the upside, was actually trading well above 113.62. But I kept calm, right? I kept cool because I knew that what we do need to see is the end of the week, and I thought that price will probably come back and close below. And that's exactly what happened. I think that's huge, right? I think that's huge from a bearish perspective, because what we had here in the last probably 5 or 6 weeks was just an upside correction, what we call a technical upside correction, correcting the previous downside segment. I think that that downside segment, the first downside segment, was, you know, the beginning of the new downside trend, or should I say downside leg, because here we have already one leg, second leg, third leg, fourth, and I think we're building up the fifth right now. So we were having an upside correction, but as you can see, it made it straight to the 113.62, and I expect from this point, I expect the next downside segment, which will be the third segment, to complete the leg all the way to the lower section, starting with a level of 109.50, which is our official price target. All right. Now I'm going to take the daily chart. Take a look at this. This was the violation coming from the daily chart, right? A few good days, price was traveling above 113.62, but as the week progressed, this was happening last Friday, and it's really no surprise. Take a look at the move, closing just below 113.62. The fact that price gapped above that level, right? It actually trades right now above that level. It was gapping, right? I think that's actually a good sign. I think that's actually a good sign. Usually when that happens, price just starts the week, in this case, starts the day above that level, but in fact, it will close the gap and remain below 113.62. Even if it's not going to remain below 113.62 by the end of the day, we just need to make sure that it's going to stay here by the end of the week. I think at some point it will begin to build up some really nice negative momentum. That's exactly what we need here. So there you go. Stop loss level obviously remains intact at 115. Once I see some negative momentum starting to build up here, I will begin to adjust the stop loss level accordingly. Right, we got a pretty serious move ahead of us, potentially speaking, all the way to 109.50. That's more than 400 pip. So it's going to be interesting to see how things will unfold here. I'll be here to keep you posted, as always. See you tomorrow. Bye-bye.